Amalgamated Appliance Holdings reported 132% jump in diluted headline earnings per share to 29 cents. That's for the 6 months ended December from 12.5 cents previously. Revenue was 16.6% higher at 526.1 million rand. Operating profit grew 25% to 43.7 million rand. The company declared an interim distribution of 7 cents per share. Paul, jump right in.
Well, this is another old-style industrial group that we've had on our markets for quite a long time. It's been through a number of different management teams and other iterations. It's had periods where it's done fantastically well in the last decade, periods where it was benefiting from big sales in its electronics and other related household durables, which is its core business. They own the Tedelex operation, and they've always been involved with imported goods, George Foreman and some of the other appliance ranges that people would have seen on the shelves. They've also had periods where they've done shockingly badly, but to be fair to them, that's because there are big issues in their business model to do with rand and to do with import substitution and competition and so on and so forth. They're on the mend, it seems, and I'm interested to hear what the guys have got to say with regard to where it's at now relative to its share price.
And those big issues don't sound too, well, it's not too enthusiastic to throw forward to the big issues in their business model.
I'm very positive on Amalgamated Appliances. I personally hold equity in my own equity account. I've been holding them for over a year. I got a special dividend last year. They pay a very good dividend. They're on an earnings yield of about 4.5%. They've just increased that now in this period reporting. Great little business. They've just acquired a whole lot of new brands as well. And their earnings are up about 131%, and that's largely on the back of a arbitration that they won. So if you strip that out, their earnings are only up 50%, but that's still very, very good, or 47.3% or something in that region. So
Nothing
the
to
earnings
sneeze
are still
at.
good. They've got good brands, and I was actually just laughing now. You said they've got brands such as George Foreman. It's funny that that's the brand that everyone remembers within the company, but they've got so many other good brands as well that are really really doing well in the retail stores. They've got good contacts or good relations with the retailers. I really like the business.
Daniel, your thoughts? You don't look too enthusiastic on this one either.
No, that's deceiving then, because I think it was a good result. Look, I think first of all you've got to strip out, like Dan said, you've got to strip out the arbitration which they won, which takes HEPS from about 29 to about 18 cents. You put that on a full year number, brings the forward multiple to about between 7 and 8. The cash situation looks very appealing, and that's with an increased working capital. They specifically took on more stock because of the Chinese New Year. So their working capital was quite a bit worse than it otherwise would have been, and still the cash situation was very good. Cash is probably sitting on about 35% of the market cap. The only thing is they seem a bit reluctant to pay a special, and they have mentioned acquisitions.
How would you react if they went the acquisitive path aggressively?
Well, I mean, they said that that's basically what they're going to look to do. The problem with that is that there's always, if you've got cash in your hand from a special, that's cash in your hand, you can do with it what you want. When a company is deciding what to do with the extra cash, like making acquisitions, there's always the risk that they're going to make a bad choice, and that's with your money if you invested in the stock. So personally, I would prefer special, but they've been doing well with what they've got so far, and I'm willing to give them the benefit of the doubt.
Dan, you want to add?
They've said they're looking at growing 50% organically and 50% through acquisitions. So it just shows they are on quite a big acquisition path. They're looking to take the whole business model up into Africa as well and do quite an aggressive expansion there. So I think generally it is looking very positive for them. And they, like I said earlier, they did pay a special dividend. Maybe they won't pay one this time, but I think if they're going to inject money into the business, into good brands going forward, I think it's very positive.
I mean, you guys are pumping this stock like it's Apple. I mean, we're talking about a 500 million rand market cap company that's had horrible earnings volatility in recent years.
Apple doesn't even pay dividends.
And this is a market where our industrial base has been eroded, and they're hanging on to a couple of things that they bring in from China and so on. Share price has moved from 180 to 280 or something in recent weeks. I mean, are you confident this thing can double again from here? And this is a business that's going to put its past behind it and really take us big strides forward?
Do you believe that they have put their past clearly behind them?
I think so. Well, we never really know. But I know the management, and they seem to be on the right track. And I say that because I believe in the products that they've invested into, and they've got really good relations with the retailers. Like I said, they're looking to add to the brands and become a lot more diversified, which will in some way bring that cost down. And
what kind of market share do they have? Do guys like, say, Massmart do their own sourcing and bring stuff in, and then they compete effectively? Or is this a case where they have quite a dominant market position in South Africa?
From what I understand, they're quite dominant. They also manufacture some of their own brands and do their own packaging and their own names as well. So they're looking to get into that space quite aggressively as well, which will add to the bottom line quite rapidly in the future.
You said you know management. You don't have Stockholm syndrome, do you?
No. Well, what I was just saying about the cost, they want to bring them down by getting all different brands and putting it on a truck and just do one delivery, which will bring down their transport costs.
Daniel,
Yes.
the past is behind them. They're fixed, so to speak.
I mean, it looks, if you take, for example, let's take one of the new brands, Remington. So they've tried to launch that brand, I think, twice before. Both times it's failed. Now they're doing something different.
Is that the one with the old guy where they said, I liked the shaver so much I bought the company? No? I think that is the old original Remington thing. Sorry, I'm interrupting you.
Now they've launched it for a third time. They put it through 15 of the top Edgar stores. The take-up has been impressive. It's being rolled out to the rest. So just taking that as one example, it looks like they've got a new approach, a new marketing approach to products, and it looks like it's paying off. And
You can't be
it's
negative.
worth having a look.
You can't be negative after the glowing reports that we've heard
look,
from both gentlemen on the desk.
The one thing that I will concede is that the market for durables, consumer goods, household goods in this country has got to be fantastic, because we're in an economy where, you know, we've got a high rate of household formation. We've got still a big part of the population which hasn't got access to formal credit and so on and so forth. So this is the sort of market positioning you want to be in. And I guess somebody's got to make the money there. So maybe I need to revise my...
Do I even need to ask you whether we're hot or not? But I've got to do it, the proverbial hot or not.
I mean, it's ran up 25% in the last couple of weeks, as Paul said. So at current levels, I'm not too sure again if I'd be diving into it, but I'm hot on the company going forward, most definitely.
Daniel?
Yeah, I'd have to agree that it's run up hard, but I like the cash position. I'd have to say hot.